Alright guys, welcome you back. So on this episode I'll be showing you what's going to happen next on gold USD. So make sure you stay tuned to the video, and if you're new subscriber to this channel, make sure you subscribe, share to your friends and family. So let's go guys. So the first thing we are going to do on this channel, on this chart, is mark out our our external structure. So how do you do that? Is by doing this. For us to mark out our external stuff, you have to mark it out this way. This is our external on daily time frame. This is our external on daily time frame. So this is that it has never broken any structure. So let's just leave it this way. So this is our stuff on daily time frame. As you can see on this side, we have a support, a resistance here, which might push the market to the downside. So let's go to our 4 hours to check what's happening on 4 hours. So on 4 hours, we have this. So let's take this out on this day time frame. So let's mark out our external structure as well. So let's start from May. This is our external structure. So this place got broken, this side got broken, come here. This is our external structure again. This resistance push this shit back again. So the downside. So I think we are bullish on gold US. So let's take that out too, so we can have a clear pattern. So but on this chart, we're having this as our order block, which you can call supply or demand. So it depends on where it is. So if it's at the top, that's supply. If it's at the bottom, that's demand. So that's our demand right there. So all these are the internal structure. So all these are the external structure, and these are the external structure. So let's mark out what's going on in the chart. First of all, we have this place got broken. So that's our break of structure. So we're having two demand here. So some demand may turn to supply, some supply may turn to demand, which is order block may turn to breaker block, and breaker block may turn to order block, which is resistance may turn to support may turn to resistance as well. So let's mark it out. So there is one here. So that's where the market reacts to buy, and there's one at the bottom here. So the market doesn't use the one at the bottom, it uses the one at the top. So from there, this is our internal structure. This all is our internal structure. That's our internal structure, and these are my external structure. These are my external structure. All the thing inside will be my all the thing inside will be my internal structure. So let's read our internal structure. This place we have change of character here, which the market will come back to retest. So this from this place we have change of character here to the downside. Market go back to the demand to sell. So we have change of character here. Market go back to the demand to sell. But when the market reach another demand here, which is this little demand here. So let's mark out all the demand we have in this internal structure. So that's the first demand we have. We have another demand here. So there's another demand here. So we also have another demand here, but the market doesn't use that demand to buy. It uses the previous demand to buy, which has many shit stuff inside, which is also our breaker block, because this structure doesn't come inside doesn't this serve as our this serve as our liquidity. So this serve as our liquidity here, which is IDM. So it doesn't use there's two stuff here. There's two OB here. So this you use this breaker block. So assuming you want to take the trade from here, you use this breaker block, and our SO will be below the breaker block, which is 140. Very huge, very huge. But we can just sit down to like 2 hours to check, to like reduce our risk. So this may be our breaker block, and just have to shift it to the downside, and we're having 19. And now assuming we enter the trade, so we'll be up like 1:5 already, 1:4 already, but we don't enter the trade due to some I don't enter the trade due to some stuff, some personal stuff I'm still working on. So assuming I'm inside the trade, I'll be up like 1:5, 1:6, 1:7. So I'll be targeting this place, assuming I enter the trade. But when we have this change of character now, we can now scale down to our 1 hour to see the internal structure. So this is one break of structure here, but I don't think maybe market will come because we're having two break of structure now to the upside. So there's one break of structure here. There's another break of structure here. There's another break of structure here. So we're having three break of structure to the upside. So just we are waiting for the market to reverse back to give us some retracement if we are to enter this trade. We are waiting for the market to give us some retracement to this place, to this supply or demand, to this demand, and then we can take our trade from it after we see some. So this will be our liquidity, which is IDM, that's protecting this demand order block. So it's in reverse. So this will be our stuff to enter the market again. So if you gain anything from the video, make sure you like, subscribe, and share to your friends and family. I'll see you in the next video.